we can really connect to customers and solve real user problems. And I think with the technology we build. And so I think that's what drew me into the project. I started off as the consensus lead for the project, grew to become the overall tech lead for the Web3 infrastructure at Meta. And we kind of built this amazing new technology, which was the DM blockchain and the Move language and a new way to think about how you program smart contracts.
And I think you're seeing really incredible talent coming into this industry from across the spectrum. Traditional finance, fintech, consumer tech. And I think all of that talent coming in is just amazing for the industry because people are building great use cases. That for me is a great sign of, continuing progress for us, the ones who are in this industry.
What we did was we decided, okay, let's figure out how to make this type of network work for everyday people. And so what we did was we really focused in on how do you get value to the average consumer, not forget the crypto bros, but how do we benefit everyday users, right?
Yeah. I came up with dual purpose pools because I wanted to say like, hey, these assets could be used like Uniswap would use them, but also the way that Aave uses them, right? And so these pools of assets are used in a dual purpose way.
Welcome to The Edge of Show, your gateway to the Web3 revolution. We explore the cutting edge of blockchain, cryptocurrency, NFTs, ordinals, DeFi, gaming, and entertainment, plus how AI is reshaping our digital future. Join us as we bring you visionaries and disruptors pushing boundaries in this digital renaissance. This show is for the dreamers, disruptors, and doers that are pumped about where innovation meets culture. This is where the future begins.
Hi, everyone. Welcome back to the Edge of Show live at Token 2049 in Singapore. I am so honored to be here today with Avery Ching, the CEO and co-founder of Aptos Labs. Great to have you on the show.
To be here.
So you guys kind of came out of nowhere and caught sort of global attention for what you're doing. And I want to sort of break down where you're at now in the sort of evolution of Aptos. It started more focused on analytics for Meta and then, to building this L1 with some pretty novel use cases. Can you tell us a little bit about that journey that got you here?
Yeah, it's been a long journey, actually. So some backstory. I used to work at Meta. I was there for 10 years prior to this. And my first 7 years, I worked on data infrastructure. So when you go to the Facebook webpage, you click a like button or hit a comment, the first thing that happens is a server records that and kind of sends it to some internal databases. And then that data is then processed and used for insights to record things like daily active users or monthly active users, or other things like about how product development is protected through systems. That is like actually going through exabytes of data per day, which is crazy. And that's the systems I used to work on, which are great. Sometime in 2018, though, there was a kind of call for we want to do something interesting in blockchain space. We don't know exactly what. And, first I wasn't actually that interested, but after meeting some of the people in the team, I felt like this is a really nice way to think about, instead of just scaling systems and making them really performant and helping products, we can really connect to customers and solve real user problems. And I think with the technology we build. And so I think that's what drew me into the project. I started off as the consensus lead for the project, grew to become the overall tech lead for the Web3 infrastructure at Meta. And we kind of built this amazing new technology, which was the DM blockchain and the Move language and a new way to think about how you program smart contracts. The design point was, Facebook's got 1 billion people by itself coming to their products every day. But what about Visa, MasterCard, PayPal, Uber, Lyft, and others? Like, if you add up some of those customers in the consortium of what the Libra Association was supposed to be, it was going to be basically the world.
And on that point, obviously Meta has been a driving force in sort of augmented reality, XR technology. Is that sort of something you think about too in terms of the future of commerce and fintech and sort of, or is that just sort of something you're watching and observing and sort of thinking about there might be an opportunity to integrate later?
I think the goal of Facebook or Meta now is very simple, which is how do you connect people around the world? And Facebook was kind of the first product to do it. You have Instagram, you have others, WhatsApp, Messenger, all those great products and groups. And so there's a natural expansion of now virtual reality kind of being another way to connect people in a virtual universe. I think about crypto and blockchain technology as something very similar. We're really connecting each other through the asset transfers, through the ability to kind of interact without, permissionlessly, but trustlessly as well, and then really be able to transact on a more like a financial or value-based use case.
So do you need virtual reality in a crypto world?
I think virtual reality is just like it's a form factor, right? Like there's no doubt that any kind of way that humans communicate, we transact with each other. We've been bartering since the beginning of time. Trading systems are not new, right? The first humans socially interacted and started to barter and then trade, whatever was.
We're a mercantile civilization.
We are.
Still.
Right. And so this is like the kind of core fundamental thing that blockchain really is built and meant for, and that's what Aptos is built for, which is to be the global trading engine.
And on that point, you've onboarded BlackRock and Franklin Templeton and Apollo. Yeah. What do you think it is about Aptos that they feel more confident, comfortable, sort of, getting on a new train?
I think the first thing you think about, like blockchain infrastructure, is the security of the code, and also the security of the network, and also the people you're working with, right? Fundamentally, because this infrastructure is securing billions and billions of dollars, and ideally trillions in the future. One mistake actually can cause the entire system to fall apart, and so that's these institutions have to take a hard look at the way that security is thought about, the way that processes are put in place to prevent hacks and other kinds of attacks. And I think this is where the BlackRocks and Franklin Templetons have kind of seen what we've built, the structure that we think about, and also like just our background working in like high assurance kind of industries to give them a lot of confidence that Aptos is the place for them to build out.
So there's a lot of different use cases for blockchain that are emerging, from RWAs to all sorts of DePIN projects to, tokenization of actually even equity. Is there one particular lane that you think has the best fighting chance of getting us to the masses, or is it just a conglomeration of all the above?
The first one of these RWAs that is starting to really pick up adoption has been stablecoin, right? We've seen what USDT and others have done in this space to kind of prove that a business model can be built there, and also that a use case is prevalent with all the utility that's been brought to customers around the world. But it's just the start, right? There are many new stables coming out. Yesterday, we just announced that USD1 from World Liberty Fi is coming to Aptos, but Aptos has got 5 of the largest stables there: USDT, USDC, USDE, PYUSD, and now USD1, right? And I think that asset issuance, going back to your previous question, it shows like the confidence that these asset issuers have putting billions of dollars onto a network and having that be the point of transaction and settlement.
Are you comfortable with there being 1,000 different stablecoins on your chain at some point, or are you more into a refined sort of focus on the tier ones with the most liquidity?
I think that it's a permissionless network, first of all, so anyone can add whatever stable they want. We haven't stopped them, right?
I guess that's true. Yeah,
that's the beauty of it, right? The other thing is, I think what we're going to see is rails that allow people to kind of not to think about it too much. So the benefit of putting stables on chain is it's now programmable money.
Could you theoretically, I I haven't thought about that yet, but is there a world where you're converting from, ETH to stable, and AI or automation chooses the best rate stable in that moment across the whole spectrum?
That's exactly the world we're thinking about. Like,
okay,
imagine today your wallet, right? Like you have maybe a couple of US dollars in it, right? It, automatically every time you open it, it's got something that you need, right? So you're in Europe, you need a euro, it just pops out. If you are, here in Singapore dollar pops out. Like that's the advantage of programming.
that would be great, because we have clients that want to sort of transact in USDT, and our bank currently accepts USDC, and it's
exactly.
I don't want to go through the hassle of swapping, and if it's a high gas day, paying $3 to $20 of extra fees.
You hit it on the point perfectly, right? This is why the cost of the network is really, really important, right? So today in Aptos, we're the cheapest by far, 100th of a cent to transact. So that change of like currency that happens in your wallet is almost free.
De minimis.
And now you can money is almost fungible between all these different types of fiat, which is amazing.
So you've said in the past that automation is one of the missing pieces of DeFi. Can you unpack that for us a little bit more?
So I think a lot of times people think about crypto and perps markets and spot markets as like this almost like casino gambling type approach. But we see the future of this as also like more of an investment platform, the way you think about traditional equities and traditional markets. I think the next step we had robo advisors back, I think a couple of years ago. They were really hot, right? Betterment and others that would invest your money for you.
Oh yeah.
But the future to me is like AI agents that are now using these kind of crypto native products, the next generation perp dexes and spot dexes are being built on things like Aptos, to then manage your money in a way that just can be matched in traditional equities markets. Instead of having a QQQ, you can actually create your own portfolio with an AI agent that rebalances it on an hourly basis, on a 5-minute basis, depends on the cost, of course, because these have transaction fees, but in a very low cost network, you can do it so fast and so quick.
There's at this point close to unlimited possibilities for what to do from a DeFi perspective, from a staking perspective. Of course, it comes with different bridges, different risk levels. Do you think AI can sort through all of that moment to moment? And if you say, I want a high but tolerable risk, agile approach to managing my finances, and this is a minimum yield, this is a maximum yield, go to town, that it'll be able to do that?
Oh, absolutely. I think as long as you can give the parameters to AI and the assets are available on chain to go trade against, we can construct portfolios that are really tailored to the individual, as opposed to like these more like, mutual funds or things that kind of are broader based funds.
So obviously, like I think of some of the Fidelity mutual funds that get so big they became unwieldy, or an episode of that show The Jetsons, where everyone gets real-time data that one sky lane is busy and they go to the other and then that one becomes busy. Is there a risk of, in this competitive world, of basically causing a run on every underperforming asset, where there's this tier of sort of top 0.1% that everyone starts piling their money and everyone else sort of gets like left in the dust? I'm just thinking about this extreme use case when you share that.
Yeah, I mean, there definitely are going to be some kind of interesting scenarios that are possible. Like, I know a very common strategy in crypto is to like loop, right? You kind of deposit in these LPs, you then kind of use the LP tokens to then kind of deposit again and kind of play these back, which are definitely add a lot of risk to the system. But I think that's kind of the interesting points of crypto, which are like a bit more freedom in terms of the way people think about what's possible. There definitely be safeguards put in place. I think those safeguards actually are best implemented by those agents, actually, as well as institutions, to kind of say like, look, you can do this, and either we won't offer that to you, you can do it some other way, or you can do this, but you should understand the risk associated with it. No different than, say, like a margining product when you think about like using Fidelity or Schwab or something like that.
Makes sense. Let's shift gears for a moment to the consumer side of Aptos and Aptos. I've said it the other way so many times in my life.
No problem.
That I have to get comfortable with Aptos.
So it's actually based on a small town. The name is Aptos, about an hour south of the Bay Area, and that's the way they pronounce it. So I think that's what we go with.
Right on. So there's cultural implications to gaming and NFTs, and sort of how that interacts with society from a collectible perspective, from a commerce perspective. I've been having some engaging conversations with Yat, who's also going to be on the show in an hour. I don't know if we'll air it before or after this, but like around sort of this. Look, NFTs are still $600 million a year business. So I don't know what industry is worth that much is dead. But what are the sort of implications for, you think, in a consumer hybrid economy at this point forward? Like, where does blockchain fit in? And do you envision the brands that sort of dipped their toe in the water and said, no, this is too cold, or, I can't see the bottom, I'm out. Are they going to come back now in a similar fashion as the institutes that are joining the party?
This is a really good question. I think my view for NFTs is that they were based along these kind of speculative cycles early on, and I think that's faded to some degree. I still think, though, that the idea of tokenized yield and incentives is actually a really powerful one, and it's actually in the similar vein, right? So But the future kind of is going to be like people going to kind of construct portfolios. For example, the things we talked about, having the investment. You can imagine now being able to just kind of invest into a liquidity pool where the
Blue chips.
the asset manager is actually implementing these strategies on chain and then passing the yields back to customers, which then, you might have a way to kind of represent that as an NFT, like a certain fractional ownership of that vault, for example. And so
It also seems like it would shift the sort of tradability of NFTs where it's, going to the grocery store and having to pick out every banana, every apple that you want is time consuming. I'd rather just have a cart and hit go and have someone else do the shopping for me. It sounds like that's going to be possible as well.
yes, so when you're talking like much more fungible kind of NFTs in some sense, right?
Yeah.
And so I think that is definitely easier for customers to get on board with. To your point on institutions and enterprises, I think we're absolutely seeing them come back into the space. Some of them have been burned before are going to be maybe a slower, but that's okay because there are many others that haven't been burned in the past that are kind of very excited about the use cases of crypto, especially for the finance use cases.
Right on. We've covered a lot, and I really appreciate all your insights. Any closing thoughts or hot takes on things that you've been thinking about a lot lately, personally?
One thing we haven't talked about much, but I think is interesting, is the cloud infrastructure space.
Okay.
It's a $300 billion year industry. It's growing 30% year over year. It's definitely ripe for disruption with decentralization technology. It's something we're working on to solving. Given my background, I used to work on supercomputers in my PhD.
How cool.
Also worked on-
Quantum and
no, not quantum, but like large scale, like the Sandia, Los Alamos, and Argonne. Things like, for instance, how we do safe nuclear simulation of the stockpile, things like that. So I think that the cloud space, we want to build storage systems and compute systems and even kind of service infrastructure on top of it that can support use cases that just aren't possible in today's industry. And it's a tremendous opportunity. We're working on a project called Shelby alongside Jump Crypto, our partners in this project, to kind of build out the world's first hot storage system.
Wow.
That can be like the first decentralized TikTok, YouTube, support AI models and data sharing, and also support enterprise use cases for cloud. So that's an area I think that's ripe for disruption, and we're very excited about it.
very cool. Avery, obviously people can go to Aptos on just Google and find your Twitter. And what's your X account?
It's Avery Ching.
All right. Thank you so much for your time today. I hope your week at Token is fruitful and we've followed along on some of the exciting initiatives.
Really enjoyed this. Thank you so much.
Hi, everyone. This is Josh Krieger, host of The Edge of Show, live at Token 2049. And we are in Singapore. It's day one. And
Josh, thanks for having me. Pleasure to meet you.
Here with one of the sort of true leading edge companies in the space, Helium. I have Frank Mong, who is the Chief Operating Officer at Nova Labs, which is the sort of growth incubator, accelerator sort of association. I'm probably you'll explain it more, yeah. But they're sort of powering the Helium network, which is obviously decentralized, and it's so great to have you on the show.
Josh, thanks for having me. Pleasure to meet you.
So I probably didn't do justice to what exactly Nova Labs is, so
Sure.
I'll let you take over the mic.
Yeah, the best way to think about Nova Labs is it's a holding company, essentially, that the original founding team of Helium started to continue to accelerate usage of the Helium network. So we don't actually expose the name Nova Labs all that often. I just say I'm the COO of Helium, and everything we do is really meant to drive growth in the Helium ecosystem.
Yeah. So when Helium came out, it was a truly novel concept around sort of this idea of mixing sort of physical infrastructure to create a node network essentially for a task. How has the original Genesis concept of Helium evolved, and what are some of the biggest lessons you learned along that journey?
Yeah, Helium started actually quite a while ago. It's a pre-crypto company in 2013. And the actual purpose of starting the company, which is still the vision today, is really to just connect everything and give access to everyone. And access to what? To the internet, to freedom of expression. And so that continues to be sort of our ethos, and what drives us as an ecosystem is to find ways to incentivize everyone else to share access. In this case, share access to the internet. And so in the early days, it's for those that watch your show and remember Helium from like 2019, we started with something called IoT, Internet of Things network. And the way that worked was anyone, you and your neighbors, your friends and family, can buy this little thing called Helium Hotspot, put it by the window in their home, and that would then plug and play, share internet to Internet of Things devices out in the wild, like fire sensors, scooter trackers, dog and pet trackers, to government usage for like streetlights, smart meters, smart city applications. And so that was in 2019. That network grew massively during the COVID times of 2020, 2021.
I'm sure it caught the attention of various Wi-Fi companies who noticed.
Actually, it may not. I don't know. But what it did do is it grew globally to about 1 million hotspots around the world and across, 200 something countries and 80,000 cities. And that was at the peak and the height of the network itself. And because the network was so pervasive and it was owned by individuals sharing, and they're earning the crypto token HNT while doing so, it really created this idea that a two-sided marketplace of supply and demand could actually come together and work.
And of course, I mean, it worked, but there were some challenges. I mean, you were breaking new ground in a huge way. So, like, what were some of the lessons learned around how to make the mechanics work even better?
Yeah, I think scale was a big problem. We launched the network with bare minimum MVP, minimum viable product, and we basically launched and learned as we launched, and with
the whole world watching.
With the whole world watching, but also with our own L1, with a Helium blockchain that we thought, oh gosh, if this got to 10,000 nodes, it would be amazing. And we ran the actual blockchain on these little hotspots, which were essentially Raspberry Pis. I mean, it's not a whole lot of compute. It has wireless connectivity. It has its own purpose of like discovering coverage and making sure that you do checks and balances across that network coverage. But it wasn't really meant to do that we called it swarm at the time, talk across the network at a scale beyond like 10,000. And we hit 100,000 hotspots globally so quickly. We were just hair on fire. And when we hit 1 million, we were barely surviving.
I remember waiting for my miner. It was like a couple month delay. Like there was so much demand. And I was so excited to get it.
It's kind of interesting because that kind of delay, which was caused by outside forces of us, it was COVID times. Manufacturing shut down in China.
I did some manufacturing before COVID, and I mean
But that FOMO created more demand, oddly. And what happened was, and I don't think people understood this well, we open sourced everything. So we were not making hotspots. It was made by third parties who took our open source designs, built a product, and sold it to consumers. But everyone thought it was us. It wasn't. And we didn't make any of that money either. So that was like a lot of millions of dollars going to a lot of other companies and not us. Those are some of the details I think people don't understand when you open source.
When you look back, would you have also had your own device?
We did have it in the very beginning because no one believed us. So we call it like...
But it was too complicated
samples.
To be a blockchain company and a manufacturing company at the same time, it's complicated.
It's too hard to do it all.
Yeah.
And it's too hard to do it all well. And so certainly those were some of the challenges we had to grow into and grow out of.
So fast forward, this year you launched the Zero plan, which is the first free U.S. mobile phone. Yeah. How does that sort of extend sort of the original vision, and what was sort of the thinking behind that? What's been the results so far?
Yeah, so from the success of the IoT network of 2019, 2020, what we did was we decided, okay, let's figure out how to make this type of network work for everyday people in their phones. And so what we did was we really focused in on how do you get value to the average consumer, not forget the crypto bros, but how do we benefit everyday users, right?
Yeah.
And so what we thought was, look, let's get into a system where phone plans could be free. And so we launched a free phone plan. You get 3 gigs of data, you get talk and text that works all across the United States. No strings attached, no credit card needed. And that plan runs both on T-Mobile, our partner, as well as the Helium network. So it really straddles both networks, and it switches, independently and freely, and you as a user don't see any change. And so that Helium mobile phone plan, I think, really helped us get into the consumer world. And it's like 400,000 subscribers now, both free, paid, $15, $30 plans. And it's operating across the United States, running on both the Helium network and the T-Mobile network.
How is it free? Where's that?
So now we get into like the crypto economics underneath that. How can it be free? How do we afford that? There's a underlining smart contract beneath the plan that says that if you're a free user, you're sharing your location with the chain. And for doing so, you're earning crypto, HNT. So we don't expose that to the user. We keep the HNT, they get a free phone plan, but they get something else. We give them something called points, like cloud points, where they can redeem that for like a $5, $10 gift card at Starbucks.
But, I did some work with disadvantaged individuals in the DC area and homeless, and having a free phone plan, it's life-changing. I mean, it's almost, on Maslow's hierarchy of needs for humanity at this point, a mobile phone's pretty essential.
Next to food and water.
Yeah.
And then it's probably internet.
And housing, but I think some people would trade shelter for a phone.
I believe you. Yes.
So it's what was the response from the consumers and the demand so far?
Yeah. So right now, demand is off the charts. So we probably get about 1,500, 2,000 net new subscribers every day. This is daily. So it's the only limitation for us is just a matter of awareness, really getting the brand out there, making sure people know about it.
In from a scaling perspective, is there a ceiling here in terms of like how many folks? Like, what if the whole world wants to use this plan?
Yeah, really, I would say the only limiting factor is probably cost, their operating costs from our perspective. But as long as the crypto token HNT, goes up, I think we can cover it.
And so next you're spending to Mexico. What made you choose Mexico? And
yeah. Well, one of our investors is Telefonica. It's a telco based out of Spain, and they operate globally. They have a phone company, cell phone company called Movistar in Mexico. And for them, what they wanted was a cheaper alternative to cell towers. And so our network model is perfect for this. It's the cost of network building is defrayed across hundreds of thousands of people instead of one entity. And the sharing of the internet, as long as it's good enough quality, works well for everyone. And so Telefonica came to us and say, look, we need to find an alternative to our current network. And we think this Helium model might work. So we tested that in Oaxaca, Mexico. So and it worked well.
They came to you.
They came to us. Yeah. And we got things going. And now the deal is we signed a deal with them where they're going to migrate about 2 million subscribers to the Helium network in Mexico. But they are a telco, and it takes a long time. So we're just in the process of working through all the details with them to get that to happen.
Do you have aspirations of sort of reaching third world developing countries, getting into Africa and other places that, truly need this service?
Yeah. And as you noted earlier, everyone needs it. Internet is probably top 3 things you want as a human being. Yeah. And so it's important everywhere. And we'll go wherever the demand is. And so we're finding that as we continue to expand, and as AT&T now uses our network, T-Mobile uses our network, Google Fi uses the Helium network in the United States as well. As you get more and more of those types of large entities driving a lot of traffic into the network, we start to get inbound demands from everywhere in the world. And so now we're actively doing pilots across the globe to start to get this really going.
Cool. It's got to be satisfying to know that you all pioneered a new industry, and the term DePIN, decentralized physical infrastructure, came up along the way. I guess it was an alternative to people saying the Helium of X or Y or Z. and everyone was using your brand for a while.
Right.
Because it was the easiest analogy, right? What was it? I guess what's been the experience been like of having that sort of on your shoulders, that you guys essentially progressing an entire new industry?
Yeah.
How's that feel?
Yeah, it's interesting you asked it that way because I don't think I ever thought of it that way, as an industry or about us. It's always been about the mission at hand, which is creating access for everybody in the world. And how do you do that? What is the best way to approach that? And we think creating the last mile, which is how people connect to the internet, and making sure that's available for all at the lowest possible cost, near free, if it's not free. That's probably the biggest thing we can do for the world. So I think from our point of view, we measure ourselves at that level of what are we doing to add value to the person that needs access to the phone? How are we able to provide that? What are we doing to incentivize everyone else to share their internet with others? Like if we can balance that correctly and we get that to work well, then an ecosystem can thrive and everyone can make something via the cryptocurrency HNT. And so that's always been like our ethos, is to push that way, whatever you want to call it. Is that the Helium kind of system, or is that a DePIN system? Or is that a DePIN industry? I don't really think that's like what's going to make us, survive, or what's going to make us win or lose. I think it's how well we add value to both sides of that ecosystem, and if we continue to drive a ton of value, we'll win as a whole.
And obviously, there's some folks in the industry that are doing some really exciting things with drones and with other use cases for a physical node network. Do you see all these potential projects being interoperable at some point in the future? I mean, this idea of like blockchain agnostic ness is sort of coming about, where there is no layer ones, there is no layer twos, and like, I guess what do you think might be possible when you think about the realm of robotics and quantum and AI with sort of this movement?
Yeah, I think my point of view here is really more about where do all these technologies you talked about, where does it meet when it comes to value realization for individual? We're very much like direct to consumer focused, both on, I would say, the usage side as well as the network side and the connectivity side. And from my perspective, it's really, as an individual, if you think about yourself or you think about others, what is the creative value to them? Like if today you're the one that's able to provide the best connectivity at the lowest cost, and it's like one of the basic needs of, that person, what else can you add on to that? What makes sense? And so I think less about applications. Like there are great other DePIN applications like Hive Mapper or Demo, right?
What's that one do?
Demo is like car statistics.
Okay.
And how it integrates with smart cities. And so interesting concepts. But again, at the end of the day, how does all of that help the individual, and what do they get out of it as a whole? So from my perspective, I think less about the tech, and I think more about like the lifestyle aspiration that they might have, and how do we help them reach that aspiration? And so that's sort of how I see the world, and that's how I treat everything from phone plans to whatever critical application that person might need.
Are you guys integrating like AI software into the plan? I know like Apple's been having trouble taking Siri to the next level. Are you thinking about, when you're talking about making being human easier? AI certainly qualifies for that job.
Yeah. We haven't done anything specific on our like the consumer side directly to the consumer, but we do a ton on the network side and how we onload or offload network loads. Like our work with AT&T heavily leans on AI and all the stuff we do, because AT&T users offload onto Helium. They use Helium network when available.
T-Mobile and AT&T are connected?
T-Mobile and AT&T are not, but AT&T and T-Mobile are connected to us.
Okay, so you work
Helium
both.
network. Oh yeah. And so I think the value prop of our network and how
it can be a great trusted Wi-Fi network for a large company like AT&T. That's achievable only because we use a ton of AI in there.
So moving forward 5 years into the future, obviously we talked about this idea of giving these phones to everywhere where there's demand. What's sort of your broader vision for where things go from here? I mean, I think you guys have been around for how long?
Well, the company's been around for 12 years.
12 years.
We've been crypto native for 8.
So 5 to 8 years from now,
Yep.
like where do you see Helium?
Yeah, I think Helium would be operating in multiple countries. May not be us specifically operating. Ideally, it's the Helium community is operating some version of what we package. That means there's this great network you can offload. You don't have to have Spectrum to operate a service in that region, and everyone's able to get very affordable internet access. I think you'll start to see that come to fruition. And the other thing I think you'll see is Helium is able to add, like I said, value to an individual beyond just internet connectivity. There's a ton of services that we can offer. I think you'll start to see that delivered.
Nice. Yeah, I mean, I think about companies like STC, Telcom, and Riyadh and Saudi. I mean, they provide so many different services. Like it's basically one of the universal touch points to humans
Right.
is their connectivity, right?
Right.
So, yeah, I think you have a fun job, ambitious roadmap ahead. Any closing thoughts you want to share with our community about Helium, things that they may not know?
Yeah, I think it's probably important for folks to know as your viewers start to evaluate different companies and projects, and it's the mission and vision is important, but I think maybe what's more important is to look at the team and how many failures they've had. The ones with tons of failures means that they've tried various ways and approaches, failed, learned from that, and they become better over time. So I actually, now that I've been at this for 8 years, believe that companies or projects in this space or outside of this space, they're really trying to figure this out. The ones I think that are real are the ones that are actually very open about the failures, and how quickly they can iterate through those failures are probably the ones really trying to build something real. That's really difficult to do. Upending a telco industry that's worth like $3 to $7 trillion globally, that's hard, right? Yeah. I'm 8 years into my journey, failed tons of times trying different things, and we're now seeing a lot of progress. That's real.
I really appreciate your perspective there. How do you sort of stay motivated, stay energized through these failures and darker days on the journey?
For me, it's really the team at Helium.
Yeah.
I'm at a point in my career in my life where my goal is to help the team and our company grow and be better and improve as individuals.
Frank,
as well.
It was really an honor to have you.
So watching everyone grow and learn and make mistakes and
one of the early
get better from those. That's probably the biggest reward for me, and that's probably why I'm still doing it.
Right on. If folks want to learn more about this phone and Helium, where should they go?
Yeah, check out the Twitter page at Helium on Twitter, or on X, or check out X at Helium Mobile.
And are you on X?
I'm on X. It's at FMONG, at FMONG.
Frank, it was really an honor to have you on the show. I can say it was one of the early projects that inspired me to get excited about this industry. So thank you.
Hey, thank you, Josh, for having me.
Hey, listeners, are you ready to amplify your voice in a digital world? Introducing .podcast domains, your gateway to the future of online identity. Whether you're a creator, a company, or just someone with big ideas, .podcast is for you. Own your unique digital identity, connect securely, and explore hundreds of apps with no renewal fees. Don't wait for someone else to claim your name. Secure your .podcast domain today and be part of the next generation of content creation. Visit get.unstoppabledomains.com/podcast to get started. Again, that's get.unstoppabledomains.com/podcast. Your voice, your rules, your identity.
Hi, everyone. This is Josh Krieger, co-host of The Edge Of Show. I'm live at Hack Season in Singapore, and it's really exciting today. And I'm honored to be back with a past guest and partner of ours, Will Fey, who's responsible for Ammalgam, which is really redefining the lending and trading in one platform. So you seem calm and relaxed. How's this week been for you?
It's good. I took a lot of things going on, running around, meeting with people, but it's a really exciting event, I think, in general, because I think everyone in the industry is in, a few square miles right now. So
Yeah, and like you guys you have a racing event again, which is so fun. Go-karts are awesome. And we're sort of on the cusp of F1, which is a big race, and you guys are racing ahead with sort of redefining the DeFi landscape as well with this new concept of decentralized lending exchange. Can you tell us more about that?
yeah, I mean, the DeFi space is super innovative, and we want to be a part of that. The main thing that I think we're adding to is that, DEXs and lending protocols are already in existence, but we really want to push lending forward into markets that currently aren't supported by current lending protocols, because either they can't get listed on something like Aave, or there's not good data feeds for the tokens because they're too new.
And why would that listing challenge be there?
The listing challenges on Aave have to do with their security model, is that one token can be volatile enough to create risk that destroys the entire protocol. And so they're very cautious about what they list and add to the basket of assets that are supported.
So if someone wants a riskier or newer asset, they have the flexibility to choose that with you all as an independent variable.
Exactly. We can create that support for lending from day one of when that asset launches, and we want to be on the cutting edge of new token launches and be able to support them out of the gate.
Cool. And speaking of racing ahead, you also got your upcoming launch on Sonic in November. Why Sonic, and what are you hoping sort of this new innovation unravels for you guys?
Yeah, well, I mean, Sonic has proven, with Andre's leadership, to be at the cutting edge of a lot of different things. DeFi, Yearn Finance, now Sonic being one of the fastest EVM blockchains in the space. And really, we were looking for a partnership that valued that our innovation and that was also willing to meet us halfway as far as supporting us the same way we want to support them. And Sonic was the perfect blockchain for that, and they've been super supportive as the ecosystem.
Cool. So obviously, there's so many different aspects of risk when you're dealing with digital assets and trading and lending. So you chose to get 2 security audits with Cantina and Chain Security. How did that go?
It's great. We're just going through some feedback now, and there was actually one other one with OX Macro. I don't want to leave them out, but the 2 big names were Cantina and Chain Security. So we just recently did the Cantina audit and got some feedback from them, and so that's the biggest blocker right now, is just fixing those issues so that we can safely deploy and have a bang of a launch.
Cool. So do you know yet when in November, or is that still TBD?
Yeah, I mean, it's somewhat dependent on engineering, right? We have everything lined up, and it's just a matter of how quickly we can get through the fixes.
Cool. And by the way, congrats on the investment grant from Sonic. Sort of is that where you're going to focus your energy for a while, or do you see other sort of layer ones in your near future?
It's hard to deploy everywhere at once.
Yeah.
So I
mean, that movie gets still like everywhere all at once. It still gives me like a hangover when I think about it.
Yeah, so I think that long term, there's no reason why we can support any EVM chain without any sort of weird gotchas in the chain itself. But Sonic's attention to us, we're mirroring back to them, and we're encouraging LPs that are interested in using our protocol to deploy on Sonic, but we will also support Ethereum mainnet.
Right on. And there's some like DeFi terms. I feel like there's a new acronym in our industry every day. There's some terminology that is used strictly in DeFi. Maybe we should do like a educational moment in this conversation. We've got dual purpose pools, recipes, and permanent gain. These aren't even words I'm familiar with, and I've been in the industry a while. So maybe you can kind of break down some of this language and why it was conceived. Because usually, this doesn't come out of nowhere. There's a need to describe aspects of this technology that make it easy for people to understand, right?
Sure. Yeah, it's always a balancing act of trying to explain things in a way that makes sense without creating jargon that overwhelms people.
Like using real layman terms, but like that sort of define it, but it's not new jargon that makes it more complicated.
I came up with dual purpose pools because I wanted to say like, hey, these assets could be used like Uniswap would use them, but also the way that Aave uses them, right? And so these pools of assets are used in a dual purpose way. So that's the simplest way for that.
Makes sense.
Impermanent gain is just trying to take something that people know in permanent loss and then say, well, what if you flip that upside down, right? And so
isn't all gains impermanent? Like unless you sell?
That's true. I think impermanent loss is called impermanent because if the price reverts to the mean, you are where you started and there's no loss at all. And so that's just kind of the same exact definition that I would describe as impermanent gain. If the price keeps diverting, then you keep gaining. But as soon as the price reverts to the mean or where you started, then your gain is vanished.
Makes sense. So one other aspect of risk is sort of the volatility and clawbacks of principal based on LTV ratios and whatnot. And of course, this is compounded when we have big surges of decrease in the core assets, and then of course the alts follow in a more intense way, typically of ETH and Bitcoin are going down 20-30%, alts are going down 90%, right? So I'm sure you're thinking about this roller coaster that is our industry, and folks like to talk about how volatility is our friend, but it seems like it's our friend, and it would keep me up at night if I was you, as you're thinking about sort of a sustainable DeFi protocol and bullet bear. So what's your perspective on all that?
I mean, there's a lot there that I can go into for sure. I think the market is what it is. It's still maturing, right? And I think that I always look at the drawdowns as usually returning to reality, but coming from sort of like Icarus flying too close to the sun. And so the lower market cap something is, the more it can be explosive, but is it sustainable, right? So that's the way I look at these things. I don't think they're dropping 90% in value because they, were worth that in the start. They're probably just returning to the mean. But a lot of that is just making good decisions as an investor of like what's going to be valuable in 6 months, 9 months, a year forward from there, not what's going to be valuable in 6 hours.
Makes sense. So any specific strategies in terms of how you're looking at LTV and whatnot in terms of sort of buffering risk for your clients?
I think the main thing that we want to stress to people is that we as a protocol have a very unique aspect, is that we have revenue as a DEX, which isn't very common. Uniswap takes some percentage of the front end, but they're still struggling with the fee switch. And our protocol, because it also supports lending, will have revenue from that borrow from day one, which is, I think, a really unique aspect and leads to sustainable token valuations, right? All of it is based on revenue. You can dress up, some tokenomics any way you want, but without revenue, it's not sustainable.
Makes sense. Will, always great to have you on the show. Always appreciate your insights. Good luck with your upcoming launch. If folks want to get involved in what you're up to, where should they go?
Yeah, our website, ammalgam.xyz, and that's AMM, Algam. And you can follow me on Twitter at DuelingGalois. And those would be the two places I'd start at.
All right. Great to have you on the show.
Thank you.
I don't think we'll pick up any of that. It would be fine.
It's fine.
Let's take a pause to shout out one of our favorite partners. For tech innovators facing legal challenges, Zuber Lawler is your go-to law firm.
They focus on understanding your technology and business model before addressing legal requirements. Specializing in blockchain, AI, VR, AR, quantum computing, and more, Zubu Lawler offers expert guidance in capital raising, IP transactions, M&A, litigation, and compliance. Visit zuberlawler.com, that's ZUBERLAWLER.com, for cutting-edge legal solutions. Hi everyone, Josh Krieger here. It is day 2 at Token 2049 in Singapore, and I'm delighted to be here with my guest today, Saad Ahmed, who's the head of Asia Pacific at Gemini. Great to have you on the show.
Thanks for having me.
So you've been with Gemini for 2 years. I'm just curious about when you got into crypto and what gets you excited about this region and led to you playing this role.
Sure, yeah. So my crypto journey actually started in about 2019, and I used to be a gold bug, and I was buying gold, and I have a very dear friend of mine who's also well known in the crypto space, and he told me to sell 10% of my gold and buy Bitcoin with it, and I said if I'm going to do that, I'm going to go read up and more on it, and I listened to like 40 hours of podcasts a week for I don't know how many weeks during COVID. And
I highly recommend if people want to learn, they listen to podcasts.
Yeah.
The Edge of Show is one of those.
Yeah, one of those, exactly. And so, just got smart about it, and then basically just went down the rabbit hole, read whatever I could lay my hands on. So that's how I got into crypto myself. And then from a career standpoint, as you mentioned, I joined Gemini about 2 years ago. And but before that, my background was actually more consumer tech. So I've been in Asia building consumer tech companies, particularly in the ride-hailing and delivery space. So I was one of the earliest employees for Uber in Asia. Okay. I launched Uber in a couple of markets, and in India, Southeast Asia, had a few different leadership roles. And then I moved to this company called Grab, which I imagine you probably used while you've been here.
Yeah, we just used it today. So yeah, in a former life, I was one of the co-founders of, and still am, one of the earliest prepared meal delivery companies in the U.S. So we're using Ghost Kitchens 10 years before they were called Ghost Kitchens.
Ghost Kitchens, right.
So yeah, we have some similar backgrounds.
Yeah. So
and there's a lot of opportunity for decentralization in that world, which gets you thinking about the implications for society. And that sort of leads me to my next question. I mean, this is not the first cycle where we've talked about the institutions are coming, right? That was the theme of the last cycle.
That's right.
What is different in terms of the maturation of the industry that makes this sort of thesis more accurate? If it is, or are we going to have to wait till the next cycle?
Yeah, I mean, the institutions are coming. I mean, and even to that extent, even nation states are coming. If you remember the last cycle, there was one nation state, El Salvador, that everyone was talking about, everyone was getting excited about. And then in this cycle, what you see is that, the sovereign wealth fund of Abu Dhabi puts like $500 million in Bitcoin, and it doesn't even barely makes the news, right? And so it's a known fact that nation states are adopting, nation states are buying, and similarly for institutions. I think what's happened with institutions in particular is that, 2 years ago, or at the beginning of 2023, we had the spot Bitcoin ETF approvals, right? Prior to that happening, I think for many institutions that had to go through their investment committees and get all the approvals and then figure out how they would custody the underlying and, get all of that process in place was just much more complicated. Whereas it's much simpler after, you could just, you already have the pikes, you already have the systems to go and allocate to Bitcoin through like an IBIT, right? Or any of the spot Bitcoin ETFs. And I think that's been a big shift where it's just much easier because that world of equities and ETFs is well known to many institutions. And I think that's led to a acceleration and adoption. I think the other big piece of this is, about a year and a half ago, regulation, particularly in the United States, which is, obviously the most liquid, the largest sort of capital market in the world, it wasn't clear, and there was no sign of what might be ahead. Whereas that changed with the change in administration.
Sure, and on that point, there is deeper tactical nuance to the regulatory differences in different regions right now. could you sort of shine a light on where this region is ahead of the game and maybe where they're lagging?
Yeah. So I think you make an interesting point, right? Like I think there's differences. I mean, the United States is a huge market, and I think once you get there's a huge population of crypto users that will then have regulatory clarity across whether it's spot, futures, etc., all of the stuff that's happening in the United States. Europe has gone that way with MiCA, where they have like a consistent framework across a large number of countries. Asia, that's still not the case. There's inconsistent.
Asia's decentralized.
It's decentralized. There's inconsistent sort of regulation across different markets. I mean, you got pockets of city-states rather. You got Dubai, you got Singapore, you got Hong Kong, where you see a lot of concentration of builders, companies, because there's regulatory clarity in those markets. And a lot of other markets is still coming. And I think and it's not going to be consistent as a result of this decentralized kind of a framework.
Has there been any efforts to bring all these folks together in one room to talk it out?
I wouldn't say so. I think like there's definitely. I mean, I'm sure the regulators talk to each other, but
not in a more formal,
concerted way to bring about a consistent regulatory framework, which would make a lot of sense for firms like us, because then it would just make it easier for us to
I think
operate.
There's an opportunity for someone to do some kind of association or alliance and try to get some representatives from different countries talking.
And I feel like that's a major difference between what's happening, and that's why you see kind of the way Web3 is adopted in different markets is very different. I mean, you might have markets like Vietnam where Web3 gaming, or Philippines, for example, where Web3 gaming is really popular. In other markets like Korea, it's really about the trading side of things. So it's just different as a result of the evolution of and how it's happened differently.
So I think there's a healthy competition between Abu Dhabi and Dubai. I don't know if Singapore is as excited to be in that competition right now as some of the other spots. What do you see as some of the interesting differentiators, incentive structures in certain regions of Asia that sort of get you excited? And, when you're talking to companies looking at this region where you say, hey, take a look at this or this, any particular policies or incentive plans right now that you're excited about?
Yeah, I would say, the most exciting thing about being in Asia is there's a concentration of builders here across the region, right? You got places like Singapore, you got places like Dubai, where you're seeing builders actually live, right? Because it's possible for you to live on kind of a Bitcoin standard almost, or kind of in a way which is friendly to crypto folks. And I think where the builders go, you have a proliferation of use cases because they're kind of building those out. With the use cases come sort of usage of those platforms and the monetization, and that brings in more builders. So you kind of have this like positive feedback loop of concentration of builders, more projects, more opportunities, more usage, a blockchain activity effectively.
Are you looking at how Gemini can sort of catalyze the builder side of the sort of innovation sort of?
Look, I mean, the way we see it, our job is to kind of obviously support the ecosystem, but at the end of the day, we're not biased to one ecosystem or the other.
Right.
But, like at the end of the day, we're an exchange. That's our primary business, and of course we have other offerings, but at our core, we're an exchange, and so we are not the arbiters of value, and I think the devs kind of choose to go with the direction in which they find the most usage of their talent and monetization and so on, and so. What we're here to do is we try to support sort of the ecosystem as much as possible, but ultimately it's up to sort of the layer ones or wherever.
Any sort of innovative programs that you've recently implemented or you're planning to implement that you're excited about to achieve that objective?
Yeah, I mean, look, our focus really is, so we've done some education programs, some trading education programs. We work with a few institutes to help young traders actually learn how, what are the tricks of the trade, and to work with, educational institutions effectively to help build that skill set. And then we also have a great program around interns. So having interns come into Gemini, help build with us. We recently had a batch of about 150 interns at Gemini.
Oh, cool.
Who are building, different products across the spectrum. So those are some of the things we do
It's a
to
great
community.
sort of thing to have on your resume. Right?
Yeah.
Really will help them get into the industry.
Exactly.
Even if they don't stay in the exchange world, it's a great
That's right.
first step. So foot in the door. So you talked about the fragmentation, the complexity of the markets.
Yeah.
Does that make it harder for an exchange from a regulatory compliance perspective, from a AML KYC perspective, when you don't have standard universal policies in each country? Or at this point, you guys just used to it, and your systems and software and sort of approach to developing is very customized for each country, and it's all good?
Yeah. Look, reality is that we would love to actually have a customized and localized experience for each market that we have that local regulated business. That's the reality, right? Because
You have to almost, right?
yeah, you have to almost, because the kinds of identification that one person might have in one country would be very different from what people are used to using in another country. Some people have digital IDs, some countries don't. And things like that, right? Which is more on the AML KYC side. And then when you go into how people are able to fund their account, what are the funding rails that they're using? If you're asking customers to get funds in via Swift, it's just going to be a much more, high friction experience. And so how can we localize the payment rails for people to get money on the exchange and things like that, right? So that's our objective, is to make that as frictionless as possible, so more users can come in and actually use the platform. And to do that, you have to build a localized business. Now, that said, it's hard to localize a business in every market because there is a lot of complexity in doing so.
Yeah, development costs are higher and maintenance costs are higher because once you localize, you have to continue to keep that going, right?
Exactly. And so, what we try to do is have kind of a consistent standard for a lot of different markets, which are, perhaps, aligned with what we do in the US, so that it's easy for us to kind of manage that. And then there are specific markets that we choose to go in where we think there is opportunity and kind of localize the business, which is what we've done in Singapore, for example.
So, looking ahead, I assume this is an industry you plan to be in for many years.
Yeah.
Looking at retail and institutional opportunities over time, do you have any hot takes on where things go from here in 3 to 5 years, or sort of at least a dream or aspiration, or where things will be over that time period?
Yeah, I mean, things have moved really quickly over the last 12 to 18 months. I think it's been incredible to see the growth. I mean, I was here at the same conference last year. I think there were 10,000 attendees. This time, I think there was 25,000.
Really? It's a lot. Yeah, they have all 5 floors.
All 5 floors this year. So I think, you're seeing kind of the growth, and I think you're seeing really incredible talent coming into this industry from across the spectrum, right? So whether it's, traditional finance, fintech, consumer tech, and I think all of that talent coming in is just amazing for the industry because people are building great use cases. And I would say as that, that for me is a great sign of, continuing progress for us, the ones who are in this industry. And, to the extent that we can continue supporting that, I think, we'll be successful.
Fantastic. If folks want to learn more about what you guys are doing in this region, where do they go? Is there a specific handle for this region for Gemini?
Yes. So we have a Telegram channel called Gemini APAC, Gemini_APAC. And, we post stuff that we're doing there. We also have our, obviously, global X handle for Gemini. You can follow me at Saad Ahmed. Happy to connect with anyone that wants to learn more about Gemini in the region.
Saad, thanks for your perspective on what's going on with Gemini in this region. Really appreciate having you on the show.
Thank you, Josh. All right.
Cool.
We've reached the outer limit at the edge of show for today. Thanks for exploring with us. We have room for more adventurers on our starship, so invite your friends and cool strangers to join our journey. If you're among the hundreds of thousands following us on Spotify, iTunes, iHeartRadio, or watching us on Myco or YouTube, please hit that subscribe button, rate us, and make an awesome comment too. And don't forget to pass this episode along to a friend or two who would benefit from it. Doubling back to again, recommend checking out myco.io, where you can watch The Edge of Show and earn for your time and attention. That's myco.io. Don't forget to visit theedgeofshow.com. The is part of the domain name. where you can learn more about collaborating with us and also subscribe to the Edge of Weekly newsletter for the latest Web3 news, events, and show drops. In addition, connect with us on all major social platforms by searching for The Edge of Show. Join the exciting conversations happening online. Lastly, be sure to tune in next time for more great Web3 and AI content. Until then, keep pushing the boundaries. Thanks again for hanging out with us today. The views and opinions expressed on The Edge of Show reflect solely those views and opinions of the show host and its guests. Please make sure to do your own research. Our show is not financial advice. You understand that you are using any and all information on or through this podcast at your own risk. Whenever making financial decisions, we recommend doing your own research and talking to your accountant for financial advice. From time to time, we may feature sponsored content on the show for which we receive value, and we may share links for which we receive a commission if you make a purchase through one of these links. Refer to our website, www.edgeofnft.com, for our full disclaimer, terms and conditions, and privacy policy.